But let's take the discussion forward and talk about the new listing, which is OLA Electric, almost flat, 75, 76 bucks. Abhishek Kaushinde, who tracks the space, is now joining us. Abhishek, what do you make of the valuations now at 75, 76 bucks? Would you be advising your clients to be a buyer? If not, then at what levels would it comfort you?
First of all, what I can say that the Ola is not in our official coverage, so we are not recommending it, and we haven't also recommended for the IP. But what we can add on here is that it is a startup currently making losses, and definitely it will take its own time to build up the space. It's good for the kind of investors who want to be with the company at an early stage to play a long-term story, and second that it can be considered as a concept stock for the EV theme, considering that it is one of the pure play EV story at this point of a time.
But Abhishek, for now, do you think what's better to do perhaps is go with the existing players which have an EV exposure, the ones who are already dominating the market?
See, here we have to differentiate the kind of a business model we have currently. So, if you talk about the Ola particularly, then it is completely a different kind of a business model. And the key metrics, if we believe that to track Ola from here, is that the kind of a free cash generation capacity it will avail over the period. And I'll tell you why I'm focusing on the free cash generation more than that of the EBITDA margin. Positive EBITDA margin kind of a thing is that it is a different business model than that of the existing players. So, say for example, existing players are manufacturing and then selling it to the dealers, and the dealers are selling to the end consumers. But Ola has its own distribution model, so it has been carrying the inventory, which would have an impact on the working capital. Two, it has its own component manufacturing thought process. Also, it has its own gigafactory project, and over the period that would shift the OPEX into the CAPEX. So on shifting of OPEX to CAPEX, we may see an improvement in EBITDA or reduction in the losses at the operating level. But side by side, it would come at the cost of a free cash outflow. So what I see here is that at the point at which the EBITDA would be adequately converted into the free cash flow, that time is that time should be considered as a good time for the company. And the second is the competition side. If you say about that now, this is if this IPO came at 2 years back, then things was completely different. But now, if you see that the legacy players are already having exposure to the EV side, and in last 1 year, if you talk about the second or third largest players, who have also built up a strong presence in the EV market. And compared to the Ola, all these players are focusing on the city specific business model. So for them, it's a one of the business, but for Ola, it's an bread and butter. So a scale up of the volumes and side by side the rise of the penetration of the EV in the two-wheeler segment would be critical for Ola in the coming period to generate profitability.
What's the outlook when it comes to some of the niggling concerns, particularly on the EV cell plant delay penalty, as well as the overall market share that they may struggle to, hold on to and grow?
At this point of a time, if we talk about, so overall EV has a 5% kind of a penetration in the two-wheeler segment, and currently it is a growing largely in support of the number of incentives. But as you see that as the incentives are declining, the overall positioning of the players in the pack has been changing. So, say for example, those players who were in the top five in the previous year, yes, are now in the bottom five. So, if the incentive support would be withdrawn, then we may see some kind of dullness in the overall EV segment for a short amount of a time. But it's an evolving sector segment, and profitability will take time. So it's of whatever be the legacy players are making the numbers, but profitability is still not in their way. So that part one should have to look about. It's again I'm repeating that it is still in a startup, and at the nascent stage it has to build up a business, and then the profitability will take care about the business. So considering the kind of a competitive scape in the two-wheeler segment, I think it has to make more efforts to build up a space.
Okay, the efforts, talking of efforts, the stock is also trying to make some more efforts to come up to 77, 78, just got the listing 2.5% higher. If one has to play a EV story, Abhishek, because for an investor, the perspective, they don't have to go and manufacture the products, they have to have a EV representation in their portfolios. So Ola Electric is an additional option you have now, apart from some of the high EV centric auto ancillaries as well, Sona, BLV and some others. Which one would be your top 2-3 names if I want to just have a EV play in my portfolio?
See, currently, if I talk from my own coverage list, then probably the Tata Motors, Bajaj Auto, and Hero MotoCorp and TVS Motors are the key players which we think to play out with the EV story. Given that these players are investing into the EV as an additional business, and that will their performance over the period. So they don't have to take care about the current profitability. Say, for example, despite increasing its market share from 3% to 11-12%, Bajaj Auto has been sustaining its 20% margin. So there is a caveat which is available with you, that profitability is coming and future growth is taking care. So it's not the case that they are waiting and watching that and over the period they will invest into the business. They are investing and they have built up a strong portfolio in terms of the overall ecosystem and the product pipeline. One. Two, second is the case of the Tata Motors, which has enjoyed the first mover advantage and now having around close to 70% kind of a market share. So what is happening that Tata Motors is continuously launching new products. Recently, it has launched Curve. So by that, it is helping in the expansion of the overall EV segment. So it's a chicken or egg kind of a situation. What would happen first? First, when ecosystem would come up, or first the product would come up? So over the period, what we see that as the ecosystem would expand in terms of the charging infrastructure and the other supporting services, in support of these models, we will see a increase in the penetration of EVs in India in next 3, 4, 5 years, compared to that what we have seen in the global market in the past 3, 4, 5 years. So that story can be replicated in India as the efforts of the different companies are visible.
Sheikh, we'll let you go on that one. Thanks so much for joining us on the show.